with me talking, I'm going to share my screen and we will jump right in. I'm sure you guys have seen that. So the US dollar gained a little bit of strength last week from the FOMC and a lot of different fundamentals. I was watching for gold on buys. I think we had a long position like right here, looking for price to break out of this little trend line here. But like I always said, I want to A to Z every single live. Just jump in, that way if there's any newcomers coming in, they'll see exactly how I trade, how I do my analysis. So I'm just going to break this down. I will remove all drawings and start off the higher time frame. We'll do the monthly. I go to the line chart and I scale price down, and I'll do this in 5 minutes. This is how easy. This is why I want to do this every live, because I can do it in 5 minutes to show y'all how much you guys are putting into your trading and your chart analysis. When you're over trading, you're over charting, then you just completely screwing up your analysis. 5 minutes. Higher time frame, monthly or weekly. I like to start on the monthly just to get a real quick window of the current price action. So for me, I don't care about price action when it's like way over here. You're talking 2015, 2009, 2007. If price is way, like you're talking 7,000 pips away from that, I don't focus on that. You've got something just catastrophic would have to happen for gold to reach those numbers. So again, I just stay at current price action. And I'll say this every time, and I'm going to take these off. I know I say this every time, but I just like the way the moving averages look. But for me, on the way I trade, I don't use indicators. If you use them and that works well for you, that's fine. It's just, I believe in the way indicators are. You're just trying to convince yourself on giving you a little bit more ammo to get into a trade, and it could be the wrong trade, because for indicators, they lag. You see how current price action is here. But if you look over here, a lot of people say, like just with moving averages, oh, well, when it crosses, that's when I would take the sell, or that's when I take the buy. Well, at current price action, you don't see that. You see this. So again, indicators lag. I'll say this every single live. You want to start practicing and gaining some consistency on clean charts, clutter-free. That's what you want. Okay, so I go higher time frame, line chart, and then I look for the peaks and the valleys. So don't focus on anything crazy. Just here. I'm just going to do just real quick current price action. I'll put one in the middle here. Maybe one there. And that's it. I'm good on the monthly. As I'll always say, you can right click this. You can change the colors, and you can put just whatever zones you can put in the settings. This is my monthly zone, and have the text right here. I like clean. Going down to the weekly, you can see how price is playing out pretty good around this area. Let's see if there's anything, maybe one here, this little peak there. And possibly we could put one here just because it is in current price action. That's enough. That's enough for me. You see there's already a lot of lines. You can easily get manipulated with just too much chaos. Now on the weekly, I will put some trend lines. Like you can see, we can just base off this. Again, I'm not focusing on craziness. I don't even have it on candles, so you don't know if it's on the wick or the body. I don't care about all that. I don't care about precision, because the market don't care about precision. We just use technical analysis to kind of give it our educated guess. So remember, don't try to sit there and dissect every single thing with the candle and the body and all that, because you're going to see, as you experience more losses and you experience more time in trading, that the market don't care about your trend lines or the levels, but it gives you a clear indication on where price is and how it's moving and where it's flowing. As you can see on the higher time frames, gold is on a beautiful bullish momentum. Even though the market has been going sideways for the last, I would say, maybe 2 to 3 years, we still have a clear indication on what price is, where it's been, where it's going, and how it's reacting to these levels. Not necessarily where it's going, because nobody knows about that, but we see where the levels are on gold. All right, so now the daily, I see where price is still pretty consistent within my lines, and then I'll go to the 4 hour, and Yeah, looks good to me. So now what I like to do, now that I have my zones, because I'm a swing trader, I like to, if I'm looking for shorts, I like to swing from the absolute highs to the lows and from the lows to the highs. I don't like to do, like, I'm not an intraday trader. I don't like to do real quick trades. I like to take trades and hold them. So if I'm looking for massive zones, and I would say I'm just going to use these boxes right here. This for me is like a massive zone. Now, realistically, no, I don't hold these type of trades because this is like insanity. 20, 33 to 17, 19. That's not realistic, but I'm just showing you on the charts. This is the type of swings I look for. Like this area of resistance all the way down to this area of support. And once you gain a little bit of consistency with that and experience, you'll start noticing that with swing trading, it takes a lot of the noise out of your trading. It takes a lot of the anxiety. It takes a lot of the chaos and stress because you're in a trade, you're holding it. I don't focus so much on the perfect entry as long as you're within your zone and you're on the lower time frame to where you're not putting like 100 or 150 pip stop, which is insanity. I always use 40 pip stops. I'll say this every live as well, just to get that instilled into y'all's head. 40 pip stop for me, mainly a 400 to 500 pip gain. So 40 loss to 500 gain, I can have like 6 losses in a row in one trade, wipe out all my losses. That's why I like that risk to reward ratio. All right, so we got the levels, we got our zones. Now I'm going to show you what it looks like when you change back to the candles, and you're going to see why I say don't focus so much on wicks and bodies and all that. Not that it doesn't matter on the smaller time frames, but when you're drawing your levels, it doesn't matter. Look how beautiful price played, and you seen 5 minutes. That was 5 minutes without me. I know I go all over the place talking, but look how price plays on these areas when you go to the line chart, because it gives you a very accurate when you hit the peaks of those areas. See how price played around here, there. It just works. I can't explain why, but it just works very well. All right, so now that we have our levels, I'm going to show you what I like to call the heart line. The heart line is in between, and this is just for me. Like there's no technical term. Like if you're going to research the heart line of Forex, this is just me, Brandon Gilbert. This is how I look at things and what I call them. The heart line is in between areas of support and resistance. So you have your heart line here. It's basically just the middle of the zones. You can do like that. I made this a little too small. And for me, the heart line is basically where the intraday traders and the scalpers would take trades. You as a swing trader, you don't want to be taking trades off the heart line because you've got price going back and forth, and there's no consistency with that. So now that we are on the 4 hour, we can go to the 1 hour. And when you can see, we have our zone. So you would say this right here, and I could normally, like if I'm charting this up, I would draw this a different color, because I don't want to confuse myself on, is that a heart line or is that a zone? Like, I don't know. So you can see that this is a massive area of support right here. Price held, momentum shifted, and now price is moving sideways, going back and forth in between this level of like 1927. Price is at the heart line. Now again, for last week, you've seen US dollar had a pretty decent shift because gold was on a nice bullish push. And then I think FOMC, the news come out right here, pushed gold down. So we are at this level, the heart line, and for me, this is where the patience comes in, because I would love to take a trade on a buy here on gold for me personally, but I just want to wait, because what price could do, completely just blast through this zone, because for me it is the heart line based off experience. That's why I don't take trades there, and it could come all the way down to the 1882 range, and then fundamentals come and give us a nice push to where we want to ride gold back up to the 1940 area. So also, again, now remember I said this is the like the base level. This is the massive area of support. Price could be coming back down to retest that, give its foundation of support, and then boom, take off. So right now for me on this week, it's really hard to say what I want to do with gold, because I would love to take a buy here, but I'm going to wait, because what I want to do is, we're on the 1 hour now. I could draw a trend line here and then scale down a little bit and have just a mini trend line there. And now we give ourselves just this little window, because listen, if you're doing intraday, especially like if you're a new trader, you're coming in or you haven't been trading for maybe like 3 or 4 months, swing trading is not the easiest to just step in, because it's a lot of patience. Like it, once you become an experienced swing trader, you've already got down pat your trading plan, your risk management's done. Like there's no question, there's no, oh, this looks amazing, let me just double my leverage. Or no, when you're going into a trade on a swing trading and you've got that experience, and you not necessarily successful, but you're consistent with it, there's no gray area. It's this, and that's it. You've got your parameters. So, but for an intraday trader, you guys are working. Like for me, when I was at the railroad, I was having to hide in the bathroom or hide on a locomotive, and I didn't have time to be setting targets, all that. So I was realistically scalping and intraday trading. So for you guys, on the 1 hour, you set your trend lines, you set your heart line levels, and you're looking for a trade. Swing traders, again, do not take trades off the heart line, because you could be looking for buys, price come up all the way to this level, and then blast through. As an intraday trader, they're only looking for 40 to 60 pips. Boom, they're out. You as a swing trader, you held, and you went all the way through your entry, all the way into your stop. So again, swing traders only look for your levels of support and resistance, none of the heart line. All right. So we are going to just play around with this. Now, on the smaller time frame, again, this is where you start looking for what candles are trying to tell you, not on the higher time frames, smaller time frames. I see where, and this is just our little trend line. This doesn't mean nothing in the market. This trend line is imaginary. It doesn't exist. It's just something that I put on there to show me what I would be looking for. So remember, don't think, oh, I see some few wicks. Price is respecting that area, I'm going to take a buy. Give yourself a little bit of patience and say, all right, I'm going to go down to the time frame. I'm going to look for a clear indication that price is respecting this area, the heart line, and I'm going to look for buys. How to look for that clear indication? You see where price will be playing around that zone. It'll drive down to kind of give a false story to trap out the sellers, and then you'll see a massive bullish candle that comes, and that'll be that wick. That's that huge, on smaller time frames, this is where you see these wicks, this trap out, this little false right here, boom, and then price drove up. You got your 60, 70 pips, you're done for the day. So you could do this. Me, if I was an intraday trader and I say, okay, I'm looking for a buy in this area already, price is at 1907, I'm going to put my stop 30 to 40 pips. So you would have your stop at 1903, and then you drive to your next level. Like if you're not sure on where your target is, put you another heart line on the smaller time frame. So just real quick, this area right here. If I was looking for buys and I'm an intraday trader, I would either, for me, I'd go ahead and get in the trade there for me personally, and then I would put my stops like around that area. We got a nice clean 40 pip stop, beautiful reward even as an intraday trade, and boom, it's done. Now if trade goes against us, like price comes down here, blows out, hit our stop, our capital is protected, that's it, it's done. We live to trade another day. We wait and see if price is going to come back, retest this area, and then go to the next level, because US dollar is strong right now. Now, let me, I don't know if you guys can see this screen that I went to, but all I did was go to forexfactory.com. I'm looking at the fundamentals. Excuse me. It looks like for today, there is some news for the US dollar, but I don't see nothing crazy. Looks like Thursday, and yeah, don't look like too much. There is some for Friday on September 29th, but nothing crazy. I don't see anything that would be driving US dollar from massive or to continue that bullish run ahead. So there's gold. This is just what I'm looking at. And remember, I said for me personally, if I was going to get in a buy right there, just a little intraday trade from I think it was 07 to 1917. That's a beautiful trade. All right, real quick, let's look at this, and then I will jump off because I know you guys are busy. Now let's look at UJ. Now we went over this last week. Let me scale this down. Oh, what a beautiful trade. I explained to y'all last week why we got into this trade. And again, price could do this nice little continuation to 150. So let's scale it down a little bit to the smaller time frames. I already see on the smaller time frames how price is kind of getting exhausted a little bit, like the buyers are cashing out, taking their profits. You see the price is just bing, hitting this little area right here. Let's just do this. This is how you identify trades. If, like, again, for intraday or scalpers, just real quick, you don't want to spend a lot of time, like you're not going to wait for your divergence and all that crazy chaos. I'm just 5 seconds. I got my little trend line. Let me go to the higher time frame just to get a different trend line here. I see that price hasn't been over in this area. There we go. So, and this is huge. This is all the way back to 2022. Boom. I'm just going to do that. Kind of scale that in just a little bit better. Remember, I'm not crazy. I don't care. Like, I could do the wick, the body. Don't confuse yourself. Just put something there to give you an indication on what you think price is going to do. And now you've got a window. We could either take buys here or we could take sales to here. All right, going back down to smaller time frame. Now, right off the rip, now we're on 4-hour time frame because a lot of you guys like to say, use the stories of candlesticks. All right, remember what I said. Price normally, if it respects that area, price drives. This one candlestick right here, 148 all the way to 149, drove out all the buyers because buyers are coming in. I mean, drove out all the sellers. So sellers were steadily dumping in orders here on this trend line and this level. They see this wick. They're like, okay. Price comes up, knocks their stops. What they do is they immediately say, okay, price is blasting through this area. We're going to get in buys. And then price comes all the way back down. So then they get in a sell. Price comes down, they're in a profit, and then the next candle opens and it goes right back through. This is how the market's designed. It is designed to completely just wonk your head up a little bit. So you put your trade in, you put your stops, and that's it. Don't revenge trade. Like, never add positions. Like, if you're in a sell here and you're in drawdown, don't add another position to. You never add to a losing position, only to a winning position. And always, when you're adding positions, scale down from your original entry. Meaning, like, if you're in a one lot on your sell here or right here, and price is going against you, you don't get in. But if you're in a sell here at a one lot and it's coming down and it's with you and you're up 80 pips, drop it down to like a 0.5 lot. So you've already, if price reverses on your second entry, you don't wipe your profits out. So anyways, staying on track. We have our zone for intraday trader. We have, even if we just right here, and we can come back. I might be doing a live session tomorrow with Corey, so we'll check this trade out. 148.87. Let's go here. This is where I would like to get in my entry. And we'll just ride down to where price previously played around a little bit. And we can put a little target right here. I mean, a little level right there. And we have, I mean, this is how, like, I started trading it. And this is how I just fine tooth, just completely, I don't know, sharpen my skills with trading. You just, there's no real way to, I don't know how to say this. There's no real perfect textbook way, like, this is when you get in a sell. No, you get your risk calculated, you find your entries, and you put it in. You have a loss, remember, on to the next day. So we have our 40 pip stop to around 120 pip gain for an intraday trade. That's beautiful. And then we can go down to a smaller time frame and see why we got into this. So for me, remember, on these levels, you'll see price come up, and then you'll have that one candlestick that gives you the clear indication on why to get into price or why to get into that position. That would be this one right here. That showed me where price pushed down, it's respecting, and then we go to small time frame and see how the candles are respecting that area. 15 minutes, still kind of a little bit of consolidation sideways, so you don't really have any clear indication 5-minute window, kind of same thing. So this is your patience window right here. And that's why I put this over here. This could be an entry for somebody in that area. I don't want to keep using these because then we're gonna lose ourselves. But this is where you could put a sell stop, a sell limit, where if price comes back down, then boom, touches it and then goes down, because price is playing around in this area. So what it could do is have its first little push of pending selling orders, and then impulse comes back. So the impulse pulls, wipes everybody out at their stops, and then the nice little drive comes down. But that looks like a beautiful sell, just saying that. Let me jump back to gold because this is my beautiful pair. And then, like I said, tomorrow I might come back and we'll look at some more. Yes, nice little beautiful intraday trade for today on Tuesday. And let me say this, for Sunday, Monday, and Tuesdays, normally for me, I don't like to trade just because there's not a lot of volumes in the market. You'll see price just doing a lot of wonky stuff, just moving sideways. And then Wednesday, New York open session, that's when just for whatever reason the markets just get popping. But that is it, guys. I hope y'all enjoyed it. Again, this is how my live sessions are going to be. I'm just going to try to give you some consistency on how I trade, what has gave me success with my trading styles, and I'll go over everything. Please put in the comments what you guys want me to go over. Like if you want me to go over like a complete plan on intraday trading or a complete plan on swing trading, I'm fine with that. I'll do whatever y'all want me to do. Well, I love y'all, and I hope y'all have a wonderful week, and I am out. I appreciate y'all's time.